Repaying bank loans destroys money. It's another of those economic truths that doesn't make a lot of sense until you really think about it. But it has to be true because all the bank-created money in the UK gets into our economy because the bank lends money to borrowers. When the bank lends the money to a borrower, there's an exchange of promises. I've explained this in other videos. The bank says to the borrower, I will lend you £10,000. And the borrower says, I will repay you £10,000. It is that exchange of promises that are recorded in a keyboard, one as a positive number in a current account, one as a negative number in a loan account, and with the two together adding up to zero, indicating that this new money is made out of thin air. And as a consequence of that process, this new money is available for the borrower to spend. And they do spend it. And as a result, as again I've explained it in another video, savings are created. The loan eventually must give rise to a saving because the banking system has to balance. So what happens as a consequence of the loan being repaid? The money that was created is destroyed. I stress that word destroyed. It just doesn't quietly disappear. It literally no longer exists because the promises that created that money have been fulfilled. If money is about a promise, and that is all it is because all money is debt, then once the debt is repaid, there can be no more money. It is as simple and straightforward as that. The money that did exist because the loan was created now no longer exists because the loan has been repaid. This has enormous consequences, however, for our economy, because what you can immediately see is that when we are dependent on only two types of money in our economy, one created by the government, which will be the subject of other videos, and the other, probably the bigger part in most economies, including that of the UK, created by commercial banks as a result of their making loans to people like, well, you and me, we are entirely dependent on this money created by loans. Then what happens is that if all loans were repaid, we'd have no money left. That is why we live in a debt-based economy, because we have no other idea about how to create the money we need to undertake our day-to-day transactions. And therefore, we are dependent upon people continuing to borrow money from banks in the economy to make sure we have a continual supply of new money to replace that which is repaid day in, day out by borrowers to banks, with their loans being cancelled as a consequence and money disappearing as a result. So we have to live in a credit economy, and we have to live in an economy where people borrow. But that's really worrying because, as we all know, in economic downturns, people don't borrow. They lose the confidence to do so. They don't go out and spend, and as a result, the money supply falls. And that is why we get recessions. So what we need inside any economy is a system of balance, which is that when the economy is doing well, then banks create lots of money because people want to borrow. We have a situation where the money supply is strong. And therefore, the government doesn't necessarily need to inject a lot of money into the economy. When the economy is weak, when people don't want to borrow, when there's a threat of recession, when people feel it's too risky to actually take on another repayment of whatever the loan might be for, then the government has to inject more money into the economy to make sure it all works. How do we know this happens and what's the evidence? It's very simple, really. After 2008, when there was the global financial crisis, people did not want to borrow. Banks were at risk. They looked pretty dubious. People felt very nervous about the state of the world. They didn't want to go out and borrow money to buy anything, and therefore the government had to create vast quantities of new government-created money to inject into the economy to simply keep it moving. Quantitative easing did that. That's what it was for. It made good the shortfall in bank lending to ensure that there was enough credit money available in the economy to keep it functioning. And the same happened all over again when we had COVID, because for exactly the same reason, people weren't borrowing. They couldn't even get to a shop to borrow, to buy, to do anything else. And therefore, the government had to step into the gap. There was nothing unusual, nothing wrong, sinister, or to be worried about this process. It was just the government filling in where the commercial banks frankly failed and people didn't want to borrow. And they had to fill in Because the commercial bank loan repayments were going on because that's what the loan agreements required. So the economy was at risk of running out of money and the government made good the shortfall. The reason why there was that risk was because when a commercial bank loan is repaid, whether it's a loan, whether it's a mortgage, whatever it's for, when it's repaid, the money that was created by it is destroyed. It's gone, it's disappeared. It's as if it never existed because the promises that created it have been fulfilled. Over and done with. Finito. Ended. And you have to understand that if you're to understand why we live in an economy where credit has to always be produced or the government has to make good the deficit, and that there's nothing sinister about the government doing that. It's just necessary to make sure there's cash in the economy to keep us all going. We'll deal with government money creation in another video. The purposes of this video, the fundamental point is repaying a bank loan destroys the money that it created.